Inflation and unemployment are going in divergent directions. ये अलग अलग डायरेक्शंस को समझना जरूरी क्यों है और ये दोनों अगर अलग डायरेक्शन में जा रही हैं तो यहाँ पे ग्रोथ को इम्पैक्ट कैसे कर रही है. Moreover, in coming times, how the changing numbers in inflation and unemployment can affect Indian economy. When inflation is falling and unemployment is rising, this is always a signal of a weakening economy. And this signal is towards Indian economy as of now, where the recent inflation trends are showing that inflation is gradually declining, whereas the unemployment seems to be stagnant and going upwards in the recent times. Hello everyone, welcome to Vajiram and Ravi's Simplified. My name is Shubhangi Singh and today we are going to understand the trends and the consequences behind this macroeconomic puzzle where we are seeing an increase in unemployment and fall in inflation. So let us start with understanding the present numbers that we see. And as per the recent report, we have seen the inflation, that means the percentage of price rise, has fallen down to 2.8%. Now, this is well below the RBI's target range. So, RBI is the one which is responsible for inflation targeting, and it has kept the range of 4% plus minus 2%. So as to ensure that the inflation is controlled as per the needs of the economy, and there is never a situation where we move towards galloping inflation or hyperinflation. But at the same time, we also assure that we are not in a situation where it is deflationary and the prices are falling down at a rapid rate. If that happens, in that scenario, the economy starts hurting badly. So, if the prices are gradually increasing, it is an incentive to the producers to produce more. That means they would be using more factors of production. If they will be using more factors of production, they will be paying the factors of production and there will be more money in the economy. These people will demand more and again this cycle goes on, which leads to the growth of economy. However, if the prices are declining, then the producers will cut down on factors of production. If they will cut down on factors of production, they will make lesser payments to the factors of production. That means lesser money will enter the economy. If lesser money is entering the economy, people will demand lesser. And this cycle goes in the other way when the producers have to cut down the supply further and the growth becomes restricted. So when the number is going beyond RBI's target range, that is also a problem. When the number is remaining below RBI's target range, that is also an issue. Coupled with at the present time when we see that the unemployment is increasing. Now, if we see the year-on-year rate of inflation, especially in terms of consumer price index, you can see as compared to April 2.5 where we saw the number of 3.16, it has come down to 2.82. Now, this clearly shows that there has been a decline in the inflation, especially at the level of the consumer. Another key data that is in front of us is the unemployment, which has increased to 5.8% from 5.1%. We were stagnant at this number for a very long time, but the recent PLFS, that is Participatory Labour Force Report, we know it through PLFS, that is Periodic Labour Force Survey. And if we go for the GDP numbers, which can be confirmed from the signal that our GDP growth has slowed down to 6.5% in 2024-25, where it was 9.2% in 2023-24. So when we are coming up with the signal that the inflation is down, unemployment is rising, and they have an inverse relationship which we see through the Phillips curve. Such questions are usually present in your prelims exam. So the inverse relationship is visible here, and this strengthening basically indicates that the economy is gradually weakening, which we can verify by the given numbers here. Now, if we see the sectoral composition and the contribution that is coming from it, the agricultural sector has grown faster and it is the main responsible factor behind the drop that we see in the inflation rate. However, it has been the non-agricultural sectors, if we talk about the secondary sector, tertiary sector, where we have witnessed the slowdown. So, this slowdown is coming from the secondary and tertiary sector, and the agriculture has been comparatively thriving faster. Furthermore, if we see the food price inflation, it has dropped from 11% from last year's October to less than 1% in May 2025. And all these key facts that are in front of us are basically clearly indicating that our inflation is well in control, rather it is in a worrisome position, gone below the RBI's target range. And whenever we are talking about falling inflation, we have to remember that that does not mean that it is a sign of economic health if the growth and unemployment is not addressed. If unemployment is not increasing, it is in a controlled state, and growth is happening, then if inflation is falling, it is not a worrisome situation for an economy. But in this scenario where falling of inflation is at a higher rate, so is the increase of unemployment and GDP growth numbers are dwindling, it is always a worrisome macroeconomic situation which shows a weakening economy. Because when unemployment is rising, that means the people have lesser and lesser demand in the economy. Now, because they have less demand, producers will be cutting down on the supply. Whenever the supply goes down, prices also go down. Now, the prices are going down, inflation goes further down. Now, because producers are cutting down on supply, they will be laying off people because they need less resources to produce more. And that is how it becomes a vicious cycle. High inflation and high unemployment, which is also known as stagflation, which we will be talking about in the end. Now that we have understood the scenario that exists, now let us move and talk about that what is the reason behind this falling inflation. So the key reason behind this falling inflation is the boom that we have seen in agricultural sector, which has helped supply to reach at the level of demand and which has controlled the prices. Now the main relief comes from vegetables because their supply has increased, pulses and products, spices and meat and fish. But there have been certain products such as oils, personal cares and fruit in which we have seen increase in terms of demand which has not been met by supply, and it has been fueling inflation at the consumer level. So one of the key drivers which has helped the inflation has been the boom that we have seen in agriculture. However, it is the improved grain output with lower agri-commodity inflation. That means the prices of the agri-commodities have been in control. That is what has been helping the consumer price index decline that we see. Many of you might be thinking the recent repo rate cut that we have seen by RBI by 50 basis point, because of which finally the repo rate stands at 5.50, has helped the inflation, but this is not the scenario. There has been a limited effect of the repo rate, especially when we are talking about inflation here, because the recent inflation fall which we are talking about had begun way before the changes in the repo rate cut, and they are induced on the supply side. This fall in inflation, they have been induced on the supply side. Inflation always takes place when there is a mismatch between demand and supply. Demand is higher, supply is lower. If supply is pushed, then the price rise can be controlled. Or if the demand is brought at the supply side level, then the price can be controlled. So if RBI's role would have worked here, then the demand would have decreased. At present, there has been no such changes in demand that we have seen or credit we have seen. Rather, the changes which we have noticed has been on supply side. So I hope you are clear that why this inflation control or the inflation fall is not being credited to RBI's policy, rather to the supply side boom that we are seeing at one end. If we are talking about household inflation, that means we are not just talking about agricultural goods here, we are talking about inflation at the level of household, which includes loans, which includes food products as well. That has remained unchanged and high, and this has been shown by the RBI survey. So this also gives an evidence for the fact that whatever change that we have noticed in here comes from the supply side of the food, and especially because of the agricultural boom. And RBI's inflation targeting has had very limited impact on the recent price trends which is present in front of us. This indicates a problem in structural mechanism, that is, when we are looking at India's CPI basket, that means the item which are taken into account while understanding the inflation rate at the level of consumer includes 50% of food items. So that means when we are understanding inflation at the CPI level, it is more reflective of the food items, and that is why it is highly affected by the supply of food items, and it is supply sensitive. It has less to do with CPI will see lesser impact in terms of credit that is being issued by RBI at a cheaper rate. So I hope we are clear that how this inflation change comes lesser from RBI's end and more from the supply side. Now let us talk about the consequences that we will be seeing because of the current trends which are being seen in terms of inflation as well as unemployment. The first of the consequences that would be in front of us would be the policy short-sightedness, which we can also say as policy myopia, because CPI only focuses majorly on food items, as I just said, 50% of it. It misses the labor market distress which might be present of credit, which might be an issue of resources. And when we are prioritizing, policy makers are prioritizing inflation control, this will delay the recovery when we are talking about jobs and enhancement of incomes. Now this will create a problem, because when we are talking about inflation control, it seems like inflation is in control. Now the policy makers will not be able to focus on the recovery in terms of jobs and incomes. Other than that, it might also lead to social unrest. If the unemployment is high, youth and informal sector workers will be affected the most. If they would be affected, it might lead to social problems, and there will be increased urban-rural migration, there will be increase in disguised unemployment, which will lead to further problems like the problems such as we see congestion, development of slums in the city, and disguised unemployment. That means there is no enhancement of productivity even when people seem they are employed. So there might be risk of social unrest which can be seen in coming times. Other than that, there will be also this consequence where you will find there will be misguided monetary signals. By that I mean, whenever a central bank is talking about a rate cut, just like we had in June, and this will be leading to speculative activities. That means people will be taking credit based on rate cuts, or RBI is signaling a rate cut that if the inflation is out of control, we are going to take the repo rate down, or if the inflation is going way down the level, then they would be increasing the rates. That means people will engage in speculations. When they will engage in speculation, it will not lead to real job growth. For example, if we see that there will be a rate cut, they will be focusing on taking loans rather than production. And if the production is not happening, there will be limited job growth that we will be seeing. Other than that, weak demand recovery. Whenever we are talking about falling inflation or economic growth, we have to take in consideration that they can be mended by better demand recovery. Now, if there is a jobless recovery, which we are seeing especially after COVID-19 pandemic, it leads to lower consumer demand, because mostly people have either disguised employment or they have seasonal employment, or they are also suffering from lower incomes. Then there will be low consumer demand, which will further hurt investment in the economy. So whenever we are talking about disinflation without inclusive growth, it leads to policies credibility loss, and this credibility loss directly impacts the economy. I hope we are clear with the consequences associated with the macroeconomic puzzle that is present in front of us. Now let us move to understand a phenomena which is known as stagflation. But when we are talking about stagflation, it is a situation where we see high inflation, where we see high unemployment and low growth. Why we are talking about stagflation as of now? Because we are at the risk of it. How come we are at the risk of it? In this scenario, if you see, our unemployment is high, we are fulfilling one factor. Our growth is slowing down, we are fulfilling another factor. And third, we see that inflation is falling. So this is the only factor that remains unfulfilled, and we are at the risk, partial risk of landing up in a situation of stagflation. Now tell me in the comment section why stagflation is a rare economic phenomena, but it is very difficult to be addressed by the governments of the economy they are seen in. That was all from my side. For more such videos and contents, you can like, share and subscribe to our channel. Thank you so much.